In today's video, I'm going to be reacting to, is whole life insurance a scam, by 2 cents. This is a channel that has over 645,000 subscribers, and this video alone has over 367,000 views at the time of me watching this. They're also sponsored, and PBS uses their broadcast. This video is super well done. It's been a while since I've watched it, but this was one of the things that I've watched back in the day, and some people shared it with me and said, "What do you think?" And I would share with them what I thought individually, and I'm like, man, this type of content reaction needs to be out in the world. And so what I want to do is just react in real time. If I can remember correctly, I'll probably agree with a lot of things that they say and probably maybe disagree with some things. At the end, I'll give you my unfiltered thoughts, and I might stop the video throughout to give my 2 cents. But without further ado, which you like what I did there with 2 cents, here we go.
John, and it instantly...
Let's do this.
The answer. Hey there, Philip here with Investor Wow. Are you looking to make a great return on your money, but you're worried about an economic crash?
Why, yes, I am.
What if I told you there's a secret investment strategy of the rich and famous? A safe, secure place to stash your money while receiving dividends of 4, 5, even 6% per year, even when the market dips.
That sounds incredible.
But that's not all. With Investor Wow, your money grows tax deferred from one year to the next. Buzz off, Uncle Sam. You could use all the wealth you build to plan for retirement, all for little Jimmy's college tuition. Or a new car. In fact, some people are so wild about this investment they've used it as a replacement for banks, lending institutions, insurance, and more.
Oh, I want one. What's it called?
Whole life insurance.
Huh? Stop us if you've heard this one. You've been thinking about beginning your investment journey, so you sit down with your local financial advisor and they throw you a curveball: whole life insurance as an investment solution. When we asked, 30% of you said you've had a financial expert recommend it.
The rest of you might be thinking, life insurance as an investment? What are you talking about?
Well, as strange as it may appear on its surface, whole life insurance as an investment has been around for generations. It's life insurance that never expires, but that's just the beginning.
It has an investment component too that's protected from the stock market and pays attractive
They're obsessed with the word investment, which is going to be one of my points I'm going to make at the end of the video.
dividends. Heck, the first book on investing I ever read extolled the amazing virtues of whole life insurance.
Let's start with Life Insurance 101. Way back in 1583, Richard Martin purchased the first recorded life insurance policy in England on his buddy William for £30. 1 year later, when William died, Richard received a £400 payout. Nice for him, and not so nice for Will.
Today, the principal purpose of life insurance is to protect those left behind if a family member dies. It's a standard component of modern financial planning, with 59% of people in the US owning some kind of life insurance.
Here's how it works. You pay a regular premium to insure somebody's life. If that person dies while the policy is still in force, the insurance company pays out a cash death benefit, usually hundreds of thousands or even millions of dollars. This money is meant to help those they leave behind.
The most common type is term life. You have a flat monthly premium for a set term, usually 10, 20, or 30 years. At the end of the term, if you're still breathing, premiums jump up dramatically, and it's not uncommon to cancel your policy at that point.
But whole life insurance is different. It has consistent flat premiums for your whole life. How can they afford to do that? By charging a much higher premium. Part of that goes towards the cost of insurance and part of it into an investment account called the cash value, which pays a dividend of 4 to 6% per year. The purpose of this account is to offset the increasing cost of insurance as you get older, so your premiums stay flat.
Unlike term life, if you cancel a whole life policy, you might get some money back. Depending on how long you've had it, you could even get more than you paid into it. Some advisors recommend that instead of borrowing from a bank, you could take out loans against your cash value while keeping the insurance in place, a practice dubbed infinite banking.
Advocates of whole life treat it as a financial silver bullet for your needs.
Life insurance without an expiration date. A tax-deferred investment for your future. Fire your banker and loan money to yourself.
How can term life possibly hold a candle to this? I think it's time to run the numbers.
Tia and Tamara are twins, both age 40 and are shopping for life insurance. Tia picks whole life while Tamara picks a 30-year term life. The death benefit for each is $500,000. Tia will be paying $563 per month for a whole life policy according to US averages. That's pretty steep, but Tia was attracted to the cash value growth. She's thinking this will count as some of her investing each year, and that 5.5% is a pretty good return.
But hold on, Tia. The 5.5% dividend only applies to your cash value portion, not the full $563 payment. According to a 2015 Consumer Report study, after costs like commissions and fees, the average whole life investment return was closer to 2%. If Tia lives to age 70, she'll have paid $202,680 in premiums, but her policy will have a cash value worth almost $280,000. She's been insured her whole life and made money. Sounds like a win to me.
Now, Tamara's 30-year term life is costing her $52 each month. If she also lives to 70, she gets nothing back. So Tamara decides to invest the difference between her premium and what she might have paid for a whole life policy. And if she invests in a basic stock index fund, she'll probably average over 7% for the next 30 years. At 70, her life insurance will be worthless, but her investment will be worth over $600,000. That's twice as much as Tia got with her whole life policy.
So, with high premiums and underwhelming returns, why is whole life recommended by brokers and advisors across the country? One word: commissions. See, agents and advisors typically receive a commission of 80 to 100% of the annual premium. So Tamara's agent made only $600, but Tia's made around $6,000.
When I first started my financial career, I too drank the Kool-Aid. It was clear that our commissions would be much higher for recommending any insurance product with an investment component. Our clients were often unaware of this conflict of interest.
To be fair, there are some situations that might make whole life insurance a good fit, like a family with a special needs child who needs a lifetime of support, or owning a complicated family business or a sizable estate with substantial taxes. But these are special cases. It's not the one-size-fits-all remedy it's made out to be.
It's best to do your own research, read the fine print, and make sure you're seeking objective advice from somebody that doesn't have financial skin in the game.
But wait, there's more.
And that's our 2 cents.
Well done. I say that sincerely. Like this video is super well done, and I have to say objectively, if I'm watching this through the lens of like, is their video helping more people? 100 million % yes. And here's why. A lot of people in the insurance industry, a lot of people in the financial advisor space, they're not bettering your life by selling you life insurance. In fact, all the reasons they mentioned, you're probably worse off buying whole life or IUL. And I know that's insane for me to say, but it's just the truth for a lot of the same reasons. So I want you to know that my initial reaction for the typical viewer, PBS, it's like, yes, if you're looking at life insurance as an investment, you should not put all your money into it. I think pretty much everyone would agree with me. You can't legally call this an investment. It will underperform. The policies we designed are not 2% internal rate of return long term. They're more around the 3.5%, 4%. But still, like, I would never call that an investment. I would never get excited about that. I would never say, don't invest, put all your money into life insurance. And there are people out there that tell you that life insurance is the best thing since sliced bread, and so you're going to be totally good. So that's the first point I want to make. I also want to point out the typical life insurance policy: 100%, zero cash value in the first year, 2% long-term growth, no flexibility, takes forever to break even. That means you have more money than what you've put in. Big fat commissions, 80 to 100% commissions, 100%. Like, they are not wrong. The policies that we design, if you do permanent life insurance, it's like the exact opposite. It's like 10% commission or 10, 15% commission on the premium. Lots of flexibility, break even, year 4 or 5, internal rate of return of almost double, it really is a different, but the big part is I would never long-term say life insurance is where you should invest all your money. If you're going to do infinite banking, you see the life insurance policy is just a better place to store capital. So you're like saying, okay, the next 20, 30, 40 years, I'm storing my money in a place that is going to give me all the benefits: permanent death benefit, tax-free growth, and all that stuff. It's not an investment. I'm going to leverage against it. I'm going to collateralize against it to do other things. And I know that over the next 30, 40 years, my money is going to be more efficient in the policy than versus a savings account. But I will say that in the example of the two sisters, one example we're showing them earning 2%, and the other example we're showing them earning 100% the math is like I would be the person that's earning 7%, because if all you're going to do is put your money into an underperforming life insurance policy and not do anything with it and not invest, there's anyone that could make that argument and tell you you'd be better off. So I agree with that, but I'm saying that's not how it always has to be done. And if someone's saying life insurance is an investment, put your money, it's going to be better long term because there's going to be no losses, be very, very careful, because again, I think life insurance can be an incredible part of your portfolio, but it should not be overhyped. And I think a lot of people in the IUL space tend to overhype life insurance a little bit more because it's like this sexy investment with all the upside and no downside, and there's so many problems with that. And I just think, again, if you're put in a position where you're pitching life insurance as an investment, it's not going to turn out well. I think that's all. I'm a big fan of having term and investing the difference. I think majority of Americans should do that, but I also think majority of Americans are just never going to be financially free. If you want to be financially free, you need to understand how cash flow works. You need to value yourself as your greatest asset. You really need to make moves. Is infinite banking going to make or break that? No, it's just a tool that might be more efficient long-term than a savings. That's thinking differently. Keep sending these videos toward me. Overall, I don't have much beef at all with this. I think it's super well done. I tend to put my rubber stamp approval. I think what's so tricky about making these videos is we have to understand that 75 to 80% of people across the board should not do anything advanced with money because they're just, take this with a grain of salt, they're just not sophisticated enough to understand different strategies. And so they got to do, they should buy term, and they should invest their money, and they should have an emergency fund. That's what they should pay off debt. And not be like, oh, like you're sounding like Dave Ramsey. Yes, because 80% of Americans plus should do all of what I just said. And I love using debt. I put over 6 figures into life insurance. I'm investing for cash flow. I'm looking at different tax strategies. Why? Because I want different results. And so I'm going to do things differently, but I'm not doing it with the typical policies that a lot of people are getting screwed with. So there's my 2 cents. I need to do more reaction content. Send me reaction content. Let me know what you think in the comments below. I love this day and age where we can react. We think about money differently. We have by the way, we have this thing called the And Asset Vault, which the And Asset Vault is simply our way of explaining permanent life insurance. If you're identify as part of the people that want to think differently and learn different strategies, we have a masterclass that talks about infinite banking. We have a handbook that talks about it's like a part 2 to my book on, overfunded life insurance. I have an interview with a ton of amazing people that talk about how they use it. And so if you want to do learn more, opt into the vault, and there's other things that we're up to at Better Wealth. So leave some love, share this video, share your thoughts. And again, thank you for being a subscriber.